Yeah. A very good afternoon to all. Learning is most effective when theory meets practice, and auditing comes alive when standards are applied in practice. And looking at the practical difficulties which students are facing, we have the board of studies academics has come out with this initiative, and the outset I extend a warm welcome to CA Hansraj Chuk sir, Chairman Board of Studies Academics, and we are also having presence of CA Dr. Rashmi Goyal, Secretary Board of Studies Academics, and soon we'll be joining by Honorable President sir also. I also extend a cordial welcome to CA Alpa Seth, faculty for the session, and dear students. Thank you so much for joining for the online learning series Audit Insights Bridging Theory with Practice, organized by the Board of Studies Academics ICI. This initiative has been conceptualized to bridge the gap between auditing theory and its practical application, thereby strengthening the conceptual clarity, professional judgment, and audit competence from the early stages of professional education. We shall now begin the inaugural session with the ICI motto song.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामंशो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन कश्चन एतद्वैता 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 एतद्वैता.
May I now request CA Hansraj Chuk sir, Chairman Board of Studies Academics ICAI, to kindly deliver his welcome address.
Thank you, Karunaji. Thank you very much for these kind of initiatives. And I really appreciate the efforts made by the Secretary, BOS, Rasmi Goel, and the entire team, Karunaji, Rajivji, our another Anojji, and many others in the BOS, particularly focusing on the audit aspects, because audit is the most prominent and the most needed subject in the whole curriculum system of the ICI. But many ways audit has a many challenges to the students. I really appreciate the students participating in this interaction. This is a series of the program which BOS and the faculty there, Karuna Madam and Rajiv ji, they are taking care of audit in the most sincere manner. And today, audit insights, bridging theory with practice. Naturally, audit has a many rules and the principles which are well written by the ICI and well written at the different forum of the world even internationally also. Whether the body there internationally like IFAC and many others of the nation to nation, those who are the regulator for the audit profession. Friends, it's been well said. Auditing is a must kind of the things in the whole ecosystem of the economy. Unless until one things are being measured properly, understood properly, and naturally, though it is a post-mortem, but this is a step towards bringing out the corrective measures in that for the future also. And today we have a fortunate ki we have one of the best of the faculty, though in-house faculties are also there, but external faculty Alpha Seth, she hails from Mumbai, and she has a many things to her credit in the audit profession. And auditing is a subject which students encounter for the first time at the intermediate level, though many those who are the graduate or those who are at a different level of their study higher education also, but they know the subject. But the practical methodology is only once you enter into the articleship. So there are the different gaps once you understand the theory part and put into the real practical shape, practical life. These kind of programs which is being taken care of by the Board of Study Academic of the ICI brings out the changes. And I appreciate our leadership, our Honorable President CA Charanjot Singh Nandaji and the Vice President CA, our own friend though who hails from the Visakhapatnam, Prasanna Kumar D, and my Vice Chairman CA Purushottam Khandelwal. They are always been progressive, and they are been proactive in bringing out many newer things in the whole system of the learning of the by the board of study, with the support of everyone and under the guidance of the president and the vice president. We could bring out many changes or many newer things with the support of the Rashmi Goel and the entire team. Many newer initiative during this year. The initiative this also with an objective to design with a strong focus on examination preparedness also, not limiting to the exam but in a practical manner. So I'll request each and every students or each and every participants to promote and naturally to reach out to the others, those who are close to you, ki how strongly board of study is very sincere, very sensitive, and many ways bringing out many newer things in the whole system of the BUS in the ICI. So my idea to share with each one of you, like in this year, we have many newer things. First, to its credit, whether it is the mentor-mentee programs, whether it is the other programs which we thought of bringing out for the benefit, like brainstorming to understand from the stakeholders how the students or the how the curriculum and how the newer things can be done. Same way, the fortnight programs, this also like this program also audit insights. This is the newer initiatives which Karuna madam and Rajiv ji is taking care of it. And I really appreciate the efforts of each and every faculty related with their subject. They are been always been thinking about the students. Always remains in their mind how best can be delivered to the students. And naturally, the year which is been passing by the council year, and which in the time to come, the coming year or the years together will be with an objective and with a motto, the serving in the mind, bringing out best of the brains, best of the knowledge, best of the minds. Those are with those kind of objective and optimization of the resources available around us, whether it is the internal at the BUS or the external resources available around us for any purpose. So those will be optimized. That is the objective with which this BOS Academic is working with, and I appreciate the leadership and my vice chairman, those who have always been supportive and guiding for the best of the activities of the BOS. And thanks to the entire BOS Secretariat, Secretary Rashmi Goel, and the entire team today. We have an audit team here. We have a Karuna Madam, Rajiv ji, and technical, which has been taking care of it, is Anuj ji. So I'm really thankful to them also and look forward all the system which is in place will be more strong, more strengthful, more pro to the students, and ultimately the objective of the best creation amongst the minds of the students, whether it is the technical skill or the soft skill that will be taken forward, so that our name and fame of ICI grows with leaps and bounds in the time to come. So, with this opening remarks or the initial understanding, I welcome once again to each and every participants, those who are there with the far-flung areas, those who are there at a different location across India, maybe some from the overseas also. And thanks to the our speaker today, Miss Alpha Seth also, for being here and sharing her knowledge to our participants, our students, and taking care and naturally supporting to the BOS academics initiatives also. Thank you all. Thank you very much. Yeah, Karuna ji,
Yes, sir.
why
So,
our president is joining us, sir?
yes, sir, he is joining. In 1 or 2 minutes, he is joining, sir. So, dear students, thank you very much, sir, for your words of wisdom and appreciation. Without your guidance, sir, it was not possible to make it happen, because we always used to discuss that auditing is a difficult subject students find difficult, and they are not able to understand the importance of auditing standards. And to make them have experiential learning, we have come out with this Audit Insights virtual series, which is commencing today with the dream project, right? Students, ठीक है. So, President sir will be joining. Till the time I would request to CA Dr. Rashmi Goyal, Secretary Board of Studies Academics, to address the students. Over to you, ma'am.
Yeah. Good afternoon, students. Now, we would like to inform you that under this program, we have divided the entire audit process systematically into 8 components, starting from our audit engagement activities to audit reporting and documentation. All significant aspects of auditing, like audit evidence, risk assessment, and substantive testings, have comprehensively been addressed with the objective that students should understand the rationale, purpose, and the requirements of the auditing standards. We do not want you to mug up those auditing standards. We want you to develop your understanding of all these auditing standards. This program has been specifically designed in order to help you to overcome the difficulties when you find the difficulty in linking these auditing concepts with the practical audit scenarios. So we encourage our students that to participate actively into it. Do not miss any session. And along with attending these sessions, you also refer to the study material side by side. You also study the referred auditing standard, because let me tell you, students, once you start reading this, you will not find any of the case scenarios being asked in the examination to be out of syllabus. It will create an understanding of this material. This program is relevant for all the CA intermediate students. It is relevant for all those students who are undergoing the practical training, and for all the CA final students. Whether you are doing your audit during practical training or not, we are helping you to understand each and every aspect of the audit over there. There is no problem in understanding the subject. It is only the interest which has to be created into the subject. Let me tell you, we have enrolled with us are distinguished speakers who have valuable experience with them, and they will share their experience in each and every session with you, giving you the live demonstration of all the documents which are used and referred in the auditing standards. We encourage our students to please go through the study material ask the question from our resources. They will always help you to understand it, and if required we will also extend our other supports also, so that no student would, after understanding, after attending this program, would ever find difficult in attempting the auditing paper in CA examination. Over to you, ma'am, now.
Thank you very much, ma'am. Indeed, it's your words of wisdom definitely guided the students that how they can go through and how they can ensure that they are having real experiential learning and they can apply the standards when they are going for audit. Dear students, quality is never an accident and always the result of higher intention, sincere efforts, intelligent direction, and skillful execution. That is called quality. It is not an act, it is a habit. So we need to inculcate this habit and that we can incorporate when we are pursuing audit. So not taking much of the time, President sir can join at any point of time. But in the meantime, I am just sharing the brief profile of CA Alpa Seth, who will be the faculty for the session. Ms. Alpa Seth is a chartered accountant with 29 years of vast professional experience. She has spent over 26 years with one of the largest audit firms in India. She led and performed audit of large listed entity. So she is really having practical experience which she can share with you. She was a core member of the firm's quality function, leading several audit quality initiatives, and she also contributed to technical guidance also with strong focus on quality control standards. So in short, what I can say that she is the speaker, she is the faculty who is having technical knowledge as well as practical experience so that she can share with you, she can give you the experiential learning, sharing the how engagement letter should be, because today our session is on preliminary engagement activities, and what we are planning to cover in this session, the standards which are relevant for this preliminary engagement activities will be incorporated with the help of practical examples like how engagement letter looks like, how we need to comply with KYC requirement. All those will be shared in today's session. So we can start with the session. In the meantime, whenever President Sir will be joining, we'll take a small break and we'll take his guidance and listen his words of wisdom. So not taking much of the time, Alpaji, now I request you to continue and carry forward the session and we can go with the flow, right? So now we are proceeding with the technical session on preliminary engagement activity, right? So over to you, ma'am. And dear students, please be remain connected and make the today's session impactful. And if you have any query, please feel free to write so that we can address the same. Over to you, Alpaji.
Yeah, thank you. So I'll just share my screen. Just confirm my screen is visible. So good evening all. Without taking much time, I'll directly jump to our session because I want to cover the topic in a given specified timeline. So I would like to set the context for this preliminary engagement activity. So as this tagline says that bridging theory with the practice. So our object for this session would be that based on the practical experience and the guidances which we'll be taking through in this topic, on this topic, you will be able to understand why preliminary and engagement activity are very critical. You will be able to understand how it is fitting in the audit process and how it is linking with other areas of the auditing. We will be also dealing with the practical scenarios, like how this is done in practically. If there are some red flags, then how that is to be addressed, how the conclusion is to be made. Those things will be addressed. And during the discussion, various pitfalls will be also I'll be addressing. So that also you will become aware of. Now, what is the preliminary engagement activity? So if you see, for that we need to first understand the audit process. So what is the entire audit process? So in this diagram, I have divided the audit process in the three phases, which generally most of the auditors also consider. Like it's a planning phase, performance phase, and a conclude and reporting phase. In the planning phase, you do actual the audit planning, meaning starting with the developing audit strategy, understanding client, understanding entity's business, the risk assessment, the internal controls, developing materiality, so and so forth. And you develop the audit planning memorandum, which will actually guide what is the risk and what are the audit procedures to be performed to address those risks. Once the plan is developed, you move to the performance. In that, you actually do the control testing and the substantive testing. Based on the testings which you perform, whatever outcome or results come, you again reconsider, is there any requirement to change or update my risk assessment? Is there any requirement to update my audit plan? If so, you go back to your planning phase documents, you update, and then again come back and perform the procedures. So planning and performance are not separate phases, they are interlinked. Once you complete all the performance of activities, you conclude on your audit, you move to the concluding phase of the audit, wherein which you perform the closing procedures, where you can go for a subsequent event review, going concern assessment, then you review the financial statements, you develop the audit report, then you look for the audit summary memorandum, summarizing everything like what you have planned, how you have performed, and what is the result of that performance. If you have identified any misstatement, you evaluate those, and that also you consider for concluding. So, and then finally you obtain the management representation letter. So this way the three phases are done. So you can also say that planning is equivalent to your risk assessment because you are identifying risk and addressing that. Performance is that responding to those risks, and conclude means you are concluding how you have mitigated the risk. Now this entire phase of planning, you will see that there are three bullet points which I have given for all the phase. That is, you have to have a professional skepticism during entire performance of entire audit. You need to document, okay, because for professional skepticism, in simple words I will say, just don't accept everything on the face. You need to evaluate what is it, why it is. Basically you have to ask a probing question, and you have to say whether it is acceptable, whether it is supported by audit evidence or not. And then third is audit evidence. At each and every phase, audit evidence has to be gathered and documented. Now if you see the client side, they will have all the documents, because for auditing you will be asking them the related documents. So they are not just maintaining books of accounts by only the passing of entry, debit and credit, but those entries are supported by underlying documents. So that is the documentation of client. Similarly, when you go for a control, the client will have a SOP that okay, how this procedures has to be performed. So that those things they are giving you as a documentary evidence for whatever access they have done. So for auditor, what is the audit evidence? Whatever you have seen is your audit evidence. So when whatever you are planning, whatever you are performing needs to be documented, and appropriate evidence has to be considered. Now, why documentation is important, that we will also touch up in the last session, which is kept for that. But in brief, I will say that why it is very critical, because that substantiate, that demonstrate what you have done. Okay, how you can demonstrate that you have done planning, how you can demonstrate that you have performed this procedure, because you will not be doing 100% audit, you will be doing a test check basis, you will be drawing samples and doing audit. So you need to document what you have done, and then only you can conclude. Now as you perform, you document, that is more efficient and effective way. Why? Because you have seen, now you know what you have seen, you can immediately document. Later on, if you go and document, it may not be efficient way because you may not remember all the things. So it's the requirement that documentation should be done as and when you progress. Now, having this audit process, you will see that preliminary engagement activity sitting little outside this three phase. Why? Because the preliminary engagement activity means what? It is the activity performed before the starting of the audit engagement. It's preliminary. Okay, so preliminary, basically this activity will help you to identify or you to consider whether the client is to be accepted or not, whether the engagement is to be accepted or not, because unless you accept, you can't perform the audit engagement. And hence the preliminary engagement activities I've kept before the planning stage, because there I'm taking the client acceptance and continuous decisions. Now, enter this process, why it is critical, why you have to go for planning, performance, and conclude. I would like to link with our practical day-to-day activities. Okay, like for example, traveling. Okay, we all travel.
Um,
Yeah.
Alpaji, if you can stop sharing. We are joined by Honorable President, sir. ठीक है नहीं हमारे स्पीकर ने क्लोज कर दिया सर अब आ सकते हैं हाँ ठीक है हाँ गुड आफ्टरनून प्रेसिडेंट सर सर प्रेसिडेंट सर ने ज्वाइन कर दिया गुड आफ्टरनून प्रेसिडेंट सर
Very good
We
afternoon.
welcome
Very
you,
good
sir.
afternoon.
Sir, we welcome you for our joining and our inaugural session of Audit Insight, Bridging Theory with Practice, sir.
Great, madam.
We
Great.
we have students from CA Intermediate, CA Final, and those who are undergoing training. All these students are present today for these sessions.
How many students are there, madam? How many students?
Sir, more than 3,000, sir.
Very good. Very good. Very good.
Yes, sir. Yeah, please, Karuna, over to you. Yes, sir. Welcome to Honorable President C.A. Charanjot Singh Nanda, sir. Sir, this initiative has been conceptualized to bridge the gap between auditing theory and its practical application, as we generally observe that students are not able to perform well in auditing subject and they lack practice of auditing standards. To make it more interesting, we have come out with the online learning series, that is Audit Insights, Bridging Theory with Practice. And this initiative has been taken by Board of Studies Academic ICI under your guidance, sir, under your and Chuksa's leadership. We have commenced this initiative today, and now, not taking much of the time, may I now request, sir, to please address the students.
Yeah, Karuna ji, just before the
Yes, sir.
president starts with,
Yes, sir. Yes, sir.
let
Yes,
me
sir.
also have a few words.
Yes,
President,
sir.
yeah, it's really been nice to have our honorable president around us. Naturally, as already been shared with each and every participants, our honorable president C.A. Charanjot Singh Nanda ji has always been proactive to initiate the newer things and guide to the board of study and the different wings of the ICI. And today we are fortunate enough that President himself has taken time out to address our young students, those who have to start the journey and take the whatsoever the challenges they face, in more particularly focusing on the audit segments. And this series, which I would like to share, President Sir, Audit Insights, Bridging Theory with Practice. Naturally, many things which are there in the whole system, which we learn from the books, which we go from the different publications of the Board of Study, and which are really being taken forward in a practical approach. This program is been with strength to give a strength in the intellectually to understand with and go in a practical manner. This program is been designed by the Board of Study Academics. I am really grateful and thankful to President Sir and the entire team at the Board of Study also to really innovating and bringing out something innovative which was never been thought of before, and it's a initiation which will bring out the fruitful result to each and every participants, and which will be spread all across the student fraternity, a positivity and a understanding like the pain points whatsoever is being understood by the board of study for the students is well taken to take the pain out and bring out best of the as far as the value addition system of the education of the CA fraternity, CA students. So with these words, I once again welcome CA Charanjot Singh Nanda ji, our Honorable President of the ICI. Nanda sir, now it's the stage is for you to share your words with the students and to the team at the US.
The Honorable Chairman of Board of Study Academic, Hansraj Chugji, Madam Rashmi, Madam Karuna, and my scores of students have come here to go home more enlightened. It gives me immense pleasure to be part of the inaugural session of the online learning session titled Audit Insights, Bridging Theory with Practice. I commend the Board of Studies for conceptualizing and launching this meaningful initiative aimed at strengthening the conceptual understanding of auditing amongst CA intermediate students while also serving as a valuable and reinforcing learning resource for CA final students. Auditing occupies a pivotal position in the financial reporting ecosystem and is the cornerstone of credibility and public confidence. In an environment where financial information forms the basis of economic decisions, the role of auditor assumes critical significance. Auditing is not merely a statutory responsibility of safeguarding public interest and upholding the integrity of financial reporting. The confidence of investors, regulators, lenders, and society at large rests significantly on the quality, objectivity, and ethical standards with which audit work is performed by chartered accountants. You need to devise ways and means to perform. कहते हैं ना, ढूंढोगे घर तो ही रास्ते मिलेंगे, ढूंढोगे घर तो ही रास्ते मिलेंगे, मंजिलों की फितरत है खुद चलकर नहीं आती. Therefore, building strong auditing competence from the very beginning of professional education is of paramount importance. A high level quality audit enhances transparency, promotes accountability, and strengthens trust in financial statements, thereby contributing to the stability and efficiency of capital markets and the overall economy. Given the responsibility, it is essential that strong auditing competence is developed from the very beginning of the professional education. Early and robust grounding in auditing principles, standards, and professional judgment enables students to appreciate the seriousness of the auditor's role and expectations placed upon the profession. When auditing is learned with the right emphasis on application, skepticism, and ethical conduct at the formative stage, it lays a solid foundation for producing competent professionals who can discharge their responsibilities with independence, integrity, and confidence throughout their career. So, ladies and gentlemen, with this level, I would like to give rest to my words. It has been really great, and I am pleased to note that this series has been designed specifically to address this need by bridging theory with practice in a structured manner. By integrating standards on auditing with practical illustrations and case-based learning, the program reinforces professional discipline, promotes a standardized audit approach. I would like to convey a special message to the students participating in this series. Please approach auditing not merely as an examination subject, but as a core professional skill that will define your future as chartered accountants. I place on record my appreciation for the chairman and vice chairman of the Board of Studies, the faculty members, and all involved in designing and delivering this program. I am confident that this initiative will significantly strengthen the audit capabilities of our future professionals. Ladies and gentlemen, with these words, I formally inaugurate the Audit Insights Bridging Theory with Practice and end with a couplet which says, अपने हौसलों को खबर करते रहो, अपने हौसलों को खबर करते रहो, जिंदगी मंजिल नहीं सफर है, चलते रहो. Keep moving and adding value to your great credibility as a professional. Good luck to all my dear students and my professional friends. Thank you. Thank you so much.
Thank you very much, sir. Very rightly said. The जिंदगी की नहीं कोई मंजिल, जिंदगी की नहीं कोई मंजिल, कारवां है कि बढ़ता चला जाता है. कब वो रुकते हैं किसी मंजिल पर जिनको चलने में मजा आता है. And under your guidance, we have started this and we have taken this initiative. We wish that it will be a grand success and it's very beneficial for the students. Thank you very much, sir, for your words of
Thank you,
wisdom,
madam.
for your guidance.
I can see Mr. Sandeva also there. Thank you so much. I take
Yes,
your
sir.
leave.
Rajiv Sachdeva sir is also there,
Thank you,
sir.
sir. Thank you.
Thank you,
Bye-bye.
President sir. Thank you very much.
Thank you.
Thank you,
Your,
sir.
your
Thank you,
words
sir.
of
Thank you.
your words of wisdoms are really very encouraging, and the way you speak, naturally, the inspiration and motivation to each and every participant and the students. And naturally, this newer initiative by the Board of Study Academic focusing on the audit segment was the need of the hour and the right time with the right approach. This Board of Study Academic have mapped the whole year in an effective manner. That is the appreciation. That is the really the as a chair of the board. Really, I appreciate the efforts by the team in the secretariat of the BOS Academic, headed by our Rasmi Goyal and the entire team, like today Karuna and Rajiv ji and technical side also. The lot of efforts made by everyone there.
Thank you. Thank you. Thank you.
Thank you, sir. Now we are again moving towards our technical session. Alpaji, now I request you to take over the session. Dear students, please stay with us because after introduction of small theory concept, ma'am will be sharing the practical insights, real documents so that you can understand when you are going for the audit, how you have to approach these documents. So over to you, Alpaji.
Yeah, thank you. So I was explaining, I was linking this planning, this entire phase of audit with our planning for a travel. Okay, so for travel, what you do, you first identify the destination where you want to go. You just don't go to any destination. First, you identify the destination, then you check out the plan, how you will go, which transport mode of transportation you will take, where you will stay, and so on and so forth. So, this activity is critical. So I will be linking this activity with each phase in our discussion. So, if your planning is not proper for your traveling, you may not enjoy your trip. You'll end up spending more amount, you'll end up spending more number of days, and you do not have a sparking or a memorable or enjoyable trip. Similarly, if audit is not planned properly, you cannot have an efficient and effective audit. So now moving to preliminary engagement activity, as Karunaji mentioned that I'll be uh, touching up concepts, because if the concepts are clear, then it is easy to put it in practice. But if concepts are not clear, then it becomes mere tick in the box, because we don't know why it is required and from where it is coming. It is coming, but from where we don't know. So when there is a requirement, okay, I need further guidance, where to look for, we are clueless. And hence, having a clear clarity on the concept and where to look for is very critical. We don't want you to mug up everything, but at least you should be aware, where can I get the guidance from. Okay, so now starting with preliminary engagement activity, if you see, it starts like if you see the SA 300, SA 300 is the standard where the preliminary engagement activity has been specified of. Okay, but if you see what it says, that it mandates the auditor to undertake three activities. Which are those activities? As a part of a preliminary engagement activity is continuance of client relationship and specified audit engagement. You need to focus on the word, the continuance. Okay, here SA 300 talks about the continuous. That means client is already there with the firm. You are continuing the client and then you are accepting the audit engagement or continuing the existing engagement. Second, evaluating compliance with the ethical requirements as per SA 220 and the establishing understanding the terms of engagement, which is SA 210. So all these three concepts will be addressing, and as and when we move, we will be actually going through those relevant documents to see how those documents are appearing, how it is practically implemented. Now, if you see that SA 300 talks about client continuance. Okay, so where is the client acceptance? Because unless you accept the client, there is no client continuance, and if there is no client, there is no engagement. Okay, so that client acceptance is actually covered in SQC1, and hence SQC1 is also part of this entire flow. Now, these activities are performed at the beginning of the engagement to help auditor to identify any risk emanating from preliminary engagement activity which can be addressed while performing the audit. Now moving to SA 220, what SA 220 says that engagement partners shall be satisfied that appropriate procedures regarding acceptance and continuance of client relationship and engagement have been followed and the appropriate conclusion reached. That means engagement partner is responsible to ensure or to check that whatever client acceptance is done or a client continuance is done, it is as per the policy and the whatever conclusion reached is appropriate. That means even if at SQC level, SQC is at the firm level, even if that procedures are performed at firm level, even if decision is taken at the firm level, engagement partners should have looked at this and seen that appropriate decision is taken. Okay. Now with this preliminary engagement activity, I'm dividing into three components. First component is acceptance of client and audit engagement or continuance of that. So there could be four scenarios. Either there could be client acceptance, that means it's a new client and the new client engagement, audit engagement. Second could be client continuous, means it's an existing audit client or existing client, and this is the first time either audit engagement or it's a second year or third year audit engagement. That means it's a continuous engagement, and either it's a new engagement altogether or a continuing engagement. So that way this gets covered. Now, SQC1 also talks about the client acceptance because it talks about the policy and process related to client acceptance and engagement acceptance and continuance that we will deal with in detail in the subsequent slides. But key focus areas would be integrity, competence and capabilities, and the compliance with ethical requirements. How we ensure this while doing this, because this is done at the firm level, but at the engagement level also it should be ensured. Then the second bucket is a compliance with the ethical requirements. And the third bucket is agreeing terms of engagement, means having accepted the client, having agreed on the, okay, this engagement is to be accepted. And then you have a formal engagement letter with the client so that there is no disagreement, or I would say there is a formal agreement of the roles and responsibility of both auditor and the client. So this way, we will be touching up all the three aspects of the preliminary engagement activity. Now start with the first component, which is the preliminary engagement activities, which is client or audit, a client or engagement acceptance and continuance. Okay, so this we have seen that engagement partner should be satisfied that our appropriate audit procedure appropriate procedures perform client acceptance and continuance, and the conclusion reached is appropriate. Now what SQC1 says, now SQC1 casts responsibility on the firm to establish the policy and procedures for the client acceptance and continuance, client and engagement acceptance and continuance. That relates to integrity of the client, whether the firm has a competency to perform that engagement and whether it has a capability. And third is ethical requirement. So take a situation where the firm does not have capability or a competency. For example, say the audit firm is a very, very small firm. It has only 3 or 4, say, chartered accountant and few article trainees, and it is predominantly serving, say, manufacturing client. And now, suppose it is getting audit of a banking industry. So now the firm has to decide it as a part of SQC. Do I have that competency? Do I have that capability or not? Because if that capability is not there, that specialized industry knowledge is not there, then how can I perform that audit? So we will be addressing these requirements also in the subsequent slide, but I'm just bridging that, okay, practically how you will be seeing, because it's not a that this is a requirement I can give tick in the box, yes, I have enough number of people and those are chartered accountant, hence we can perform. No, we have to see the client is in which business, which which type of environment is there, and all those things. And then the ethical requirements. If the client integrity is questionable, then whether the firm really want to engage or involve or get associated with this client, that decision is being taken. Now, this is not done at the beginning of the this thing, that it's not a one-time exercise that okay, I have accepted the client and then full stop. No, every year you have to reassess, and hence it's a client continuous because the circumstances change. So, is there any circumstances which is giving red flag for integrity of the client or any of this requirement, and that has to be assessed. So, first we will deal with the integrity. So, how you assess? So, first you have to look for the factors. What are the factors you consider to evaluate the integrity of the client? So for that, to identify those factors, you need certain information, right? So from where you will get the information. So you should be very clear what could be the sources of information. So suppose a new client is coming. So what you have to do? So basically, the firms are like if it's a large firm, then the firm's the central team who looks after say this activity. They will perform this activity, and if it's a small firm, then the respective team will be performing, or the person who has been designated this responsibility. So basically you perform the background check on what? You'll be performing background check on the client and the key managerial personnel. So like key managerial personnel would be the board of directors. You should know who are the members of the board, who, if there is an audit committee, who are the members of the audit committee, who is the top management like MD, CEO, CFO, those people, and then the perform background check whether those are the people with whom you want to initiate, you want to get associated with. Are there any red flags? Suppose in these people, when you do the background check, you come to know that there is one, say, CFO or MD, or maybe a person in the top management. That person happens to be a relative of PEP, politically exposed person. Then does that increases my risk? That assessment needs to be done because there is a red flag. Now PEP, what happens, like politically exposed person is in a normal term, I would say that it is a person who is holding a important position in the government or a regulator or a ministry. Okay, and because of that they have a power to influence the decision. So do I have that red flag? Okay, if that's a red flag, do I upfrontly say no to client, or I can do something extra? So for that you have to see what is the governance at the client, how it is working, whether a decision is taken by one person or no, it is a board decision, how it is functioning. All those areas needs to be considered. All those factors needs to be considered before concluding. And then you give the risk criteria, that whether I have a high risk for these or I have a low risk for this, and then you give the suggestive procedure. Similarly, you can look for the annual report. You can search the entity website and all the publicly available information. Is there any litigation against the client? Is there any negative media exposure of the client? Like clients' news are coming in a negative way in the media, then why it is coming? What could be the thing? And that needs to be considered. So all these internal, these are the external. Now internal could be like suppose like a tax function of your firm or a tax partner of your firm would have rendered services to this client, tax related services, maybe appearing to the.
Alpaji, can we share some documents and then we can make them explain to interlink it?
For integrity, I have a client acceptance document that I'll be sharing.
Yeah. For client acceptance, if we can share the document and then make them understand with the practicality.
So when you do this way, you actually document the client acceptance continuous form. You put all the information over here. So I was thinking that once we understand this, then we can go through this document. But in between, okay, so this is a client or engagement acceptance and continuance form. So this is the illustrative form. There could be more information come and can come in this document, and this is basically an extract just to demonstrate how this gets documented. Okay, so basically you document here the basic information about the client. Okay, whether it's a new client or a continuing client, that you have to say. So for the demonstration purpose, I have taken that it's a new client relationship and it's a new engagement. Okay, suppose it's a not new client, then what is the edge relationship? Means how since how long you are serving this client. So this information is very critical because long association with client also puts a trait, and that for the firm has to see that is there any need to take corrective action, because for the specified entities, say listed entities, there is a rotation requirement. Okay, so if a partner or if the firm has served for X number of years, like served some term, then there has to be rotation of auditor. Similarly, the firm will have similar requirements about the rotation of the team, because it creates a familiarity trait. So, and when there is a familiarity trait, there is a trait on the professional skepticism. It comes down, and hence this information is also very critical at the acceptance stage or a client continuous stage. Now, if this is a recurring engagement, so audit engagement generally is not, because is not considered to be a recurring engagement or a continuing engagement. You can consider as a recurring engagement, but not as a continuing engagement, because you are issuing audit report at each year, and hence each year is a separate engagement. So it's not a continuing engagement. You can say it's a recurring because every year you are performing audit. Then you give the basic information of client. This is required because based on their CIN, if it's a company, there will be a CIN. If it's a LLP, there will be a LLPIN, the PEN number. All this information will help your team to perform the background check. So you want to perform certain checks on the company. So then based on CIN, PEN, you can see is there any litigation against the client or not. Those information can be captured. All publicly available information. Similarly, registered address, is it a multi-location client, which areas it is operating, those information get captured. Now, suppose the company is having operations in sensitive areas, then again it creates a red flag that will there be any restriction on performance of audit procedures or not? How you will go and audit over there? Those things get captured. So hence the registered address and also the other location of the company, that information is captured, whether it's a multi-location client or not. Nature of business, what is the business, because that also helps in identifying the risk. Suppose the client is in a highly cash, what I would say, cash generating, sitting on the live case, like it's only a cash business. There is a significant like retail industry. So whether that is okay, to what extent you can accept the risk. If that is the case, then how you will mitigate those risks. So that nature of business is also very critical. I gave the example of a banking industry. Suppose it is in a banking or it's an NBFC and we don't have that expertise. I'm not saying we cannot take client, but then some additional actions is required. Like you may need to take that expertise, you may need to develop those skills. Those additional efforts are required, but that can come provided this information is available and that is assessed. Similarly, key managerial personnel honors here, basically here the reference work paper, because all details will not come here. So there will be an attachment to that document. So there you will be documenting details of the key managerial personnel, their name, designation, their PEN number. Again, for them also the background search will be formed. You will be searching that is there any information available about this person. Similarly, you will discuss with internally also with your peers also. Okay, do you know this person? Because suppose you have served this person, or maybe you happen to know that person. So those things also you need to talk to the people and get the information about these people. Because if there is a I would say questionable management attitude, then definitely it will have impact on your audit performance. So is there any such red flags or not? So that comes over here. Similarly, DCWG, those charged with governance, who is the board members, who is the audit committee members, those details comes on them also. Those for background checks are performed. With background checks, you identify red flags are not there or not there. Like for example, when you perform background check on the name, you may come across that okay, this person happens to be a relative of a PEP. So that gives a red flag. So that information gets captured. So this is the basic information which you have to capture and document. And this will demonstrate that yes, these steps are performed. What background check performed, that also gets documented in the respective work paper. Then prior audit information, that will be relevant when you have already performed audit for that entity in the past year. If that is the case, then you give that information. Now, in our example, we have taken a new client and new engagement. That means this is not our continuing client. Okay, this is our a new client. So in that case, I have assumed that previous year are audited by the previous auditor. So then I'm giving you a prior year information. Okay, this audit was performed by the predecessor auditor, and they have rotated out 5 years because they completed their term. Now, there could be a scenario where the auditor would have resigned. If that is the case, that also information will be captured over here, and then that will again give one more red flag. Okay, why auditor have resigned? And then additional information is required, additional steps is to be performed. So that information gets over here. Then you look at the financial statements, that also you document over here. Okay, you see the previous year financial statements to see what is the operations of the company, what is the financial performance of the company, whether it's a highly debt incentive company or not, what is the shareholding pattern of the company, whether it's a owner managed company or not, whether it's a profit making, is there any red flag for the going concern? Suppose company is making a loss making company, whether net worth is eroded or not. Those things, lot of things you can see from the financial statement. So those analysis you have to do, and that needs to be documented here. And based on that, again, you have to identify the red flag. Now, what we were discussing about the integrity. So I'll just go back to the presentation. So integrity is here. Then you see the competence capability, and those things will also get captured in the client acceptance. So integrity may what you will do, principal honors, key management that we have seen, you are documenting the nature of client's operation, aggressively concerned for low fees. Like for example, the audit fees is very, very, very low. Like it's a multi-location client having complex transactions or having complex operations and requires specialization, and but the audit fees is very, very, very less, and they are arguing. So then there is a aggressiveness from the client side on the fees, so that can be also a red flag. Then why they are approaching us, that we need to know. That I will tell that many times it happens that the company wants to bring the these FPIs, HNIs in their this thing, or maybe the venture capital as an investor. So there is a pressure that okay, if this party is coming, then this is to be done. Similarly, the company wants to go for a IPO. That means sooner it will become a listed entity. So those reasons we should know that okay, why there is a change, why this appointment is happening, why the or suppose auditor has resigned, why auditor has resigned. We need to know whether it's a genuinely completion of the term. If they have resigned in between, then there could be some reason, right? Why? What could be the reason? Is do they have a concern on the financial reporting system of the entity? Do they have a concern on the integrity of the management? What that we need to see. Is there any fraud sitting over there? All those things happens. Then scope of work limitation, and whether the entity is involved in a money laundering and other activities or not. Now here we have summarized that okay, in the client acceptance, what are the requirements. So whether the engagement team have reasons to concern about management characteristics and integrity. So integrity, that's what we discussed. Those evaluation you have to do, and then you say respond no. Now, just responding yes or no is not sufficient. You need to actually document what you have done. Okay, so here what I have done in the remarks column. I have considered to document only conclusion, and the detailed work I am referring to the work paper. Okay, so you can have directly over here also. So suppose I have done background performance search. Okay, I have gone to the internet and done the name hits. Okay, when you have a name hits, the results comes. So you can take screenshot and put that as a work paper attachment. There could be some internal form database or any database available that you can consider and put it. So, any media reports. So those things has to come. So here you have to document that based on which what procedures you have performed to conclude on this. Okay, yes, I don't see any concern for the management characteristic integrity. Okay. Now in the given case, it's a new client. So and the previous year was audited by the predecessor auditor. So then you will be also discussing with the predecessor auditor. Now this discussion is before the appointment. Okay, just to gauge the understanding why they are moving on. So that also you can discuss. You have to first connect with the client and tell them that you would like to discuss with the predecessor auditor and understand this. And once they tell the predecessor auditor, then only they will be able to talk to you. So this also you have to perform, get their concern that okay, what is the actual cause of their moving out from the audit engagement. Okay, then you would have done the background search for the KMP, that name search which I referred, so that everything whatever you have done, that is to be done. Now the example which I have taken is that we are getting a audit of a subsidiary company, and its parent company is already audited by us. If that is the case, then you can put that as well. Okay, what is the relationship I have? Why I know this client? That is one additional information, because I am doing the audit of parents, so I know the corporate the culture of the tone at the top and everything. So those things get documented over here. Then the next requirement is management's overall commitment to reliable financial reporting. Okay, so whether management is having a commitment or not of the financial reporting or not, that is very critical, because if it is not there, then you will have a challenge in closing your audit. Okay, so here I have said that okay, I looked at the previous year audit report and it is unmodified, because since they have a financial report which is reporting which is reliable, there is no concern by the previous auditor, and hence I'm considering that. In fact, at the holding company level, as a parent auditor, I would have also considered that financial statements for a consolidation purpose. So that experience also helps. So that also can be documented. Okay, that based on that, what you are commenting on the management's commitment over financial reporting.
Ma'am,
Yes.
it's students are very much interested in this, and you are very interactively explaining also. If we can just elaborate more with small pace, means the pace can be little slower actually, not
Okay,
small, sorry.
slowly.
Slow. Yeah. Thank you, ma'am.
So then next comes to management's commitment to reliable accounting process and information system. So here also you can get information based on discussion with the predecessor auditor if it's a new client. If it's an existing client, then you already have a experience with the client, because you have done the working or engagement with the client. So you know how they are giving importance to their accounting system and information system. Then in the given case, we have taken example that we were also a parent auditor. So then I know that for a subsidiary, how they are looking at parent level, were there any concerns? So those things can help in deciding or understanding these requirements. Suppose the company is having too much transactions or a voluminous transaction and still it is in the tally, then you can understand that why tally, whether the tally is I would say appropriate tool to manage all these operations. So that can be discussed. I'm not saying it cannot be used, but you need to understand that what is the management commitment, why management is not taking some integrated software which will help or ease out their operations, could be the thing, or what is the IT system management is using. So those things can be considered over here. So that comes based on the, once you have a suppose existing client, based on your audit experience you will get that information. And for the new client, so I've told that predecessor auditor or your other whatever searches you are performing, through that only you will get. So at the client acceptance stage, suppose you don't have that sufficient information, whatever is information you have, you are concluding. But during the course of audit also you get additional information. You know, I have a concern over management's commitment to reliable accounting process. You have to come back to the client acceptance process, reevaluate this risk, and see, do this red flag is increasing my risk or not? If yes, again modify this, because it's not a static document. As I mentioned, all the documents, entire process is not a static, it's continuous. So at each and every stage you have to go back. So anything, any concern you note, you have to see where it will impact. Will it impact my client assessment? Will it impact my engagement assessment? Will it impact my risk assessment, financial statement level? All those things needs to be considered, and then or update the document. Then comes organization structure. So this also information you can get only based on the preliminary discussion with the client. You can look at the client's website, Then also about us, they would have given about their organization structure. So broad structure, you will know who is the management, what is the which are the positions, those things you will get. And then based on that, you will understand that whether the organization has a complex structure or not. In the given case, being a parent auditor, I have a visibility, so I can say whether I have a complex organization structure or not. Then management structure and control. Again, this will come based on the discussion, because when a client approaches you, you will be discussing, you will be asking certain questions. Okay, so based on that, you will see how the management is structured, what is the organization structure, how they are controlling, whether everything is passed only once the MD is approving, or there is a proper SOP through which the different function heads had been given also power, and they follow the process and they approve. So those things, like what is, how it is getting controlled, whether the company has an audit committee, whether the company has an internal audit function, whether the company has a board is actively involved or not, all those things comes based on the discussion. Now this discussion definitely will be held by the senior team members, say engagement partner or engagement manager, but nevertheless you will be taking that role sooner or later. So you should be aware of that this things has to be done and how it is to be done. Okay, and when this is done, so when this document is updated, you also have to go through, and when you perform the audit procedure, you should link that, okay, at the time of client acceptance I was having X information, but now I'm getting Y information. Is there any impact? Go back, update, and re-evaluate. Characteristic and integrity of significant related parties. So related list of related parties you will definitely get from the financial statements. From that you have to see what are the transactions, then discuss with the management, and see whether is there any concern for those related party. Okay, we have done the background check for the KMP and the entity, but what about the significant related party? There are significant related parties. So for that also, if you can also consider performing background check, not for all related party, wherever you feel so. You get some say negative reports, then you want to do further deep dive on that. So those things you can do. Now, in the given case, I've said that holding company is audited by us, and the company is having only transaction with holding company, because this entity is having is a like a I would say, for example, say service company. So it is a cost plus markup type of structure it is having. So everything is sold to the holding company, and holding company is audited by me. So I don't foresee any challenge in the related party transaction, even if it's 100% with the holding company. So that way I'm concluding. So this type of evaluation you have to do and document. So basically, for each requirement, you have to document your basis of conclusion. Only conclusion will not help. Okay. Now, nature of services to be provided in the reports expected. So this is a general information, because that is under the Companies Act. But suppose the management says, okay, no, you don't give X report, you give only Y report. Generally, this doesn't happen, but this may happen in the other than company audit. It may happen. So you have to be very clear that which type of services I am supposed to render. Suppose the client is saying that you also do the accounting. Suppose it's a trust, and trust is saying that you also, I'll give you my bookkeeping services and you also do the audit. So that is not acceptable. It's a prohibited service. Bookkeeping is a prohibited services. You can't do audit. Okay, so those type of things. So hence it is very critical that you get the clarity on which type of services to be rendered, and what type of report will be issued. So this report here, the report will be issued under the Companies Act. So under the Companies Act requirement, you should know which are the requirements, whether I'll be able to perform those procedure and issue the report or not. Similarly, if it's a NBFC, then there will be some additional report to the board in certain circumstances. There will be report to the RBI in certain circumstances. So those information is required. So you should be very clear that which type of services, what reports I will be required to be issued under this engagement. That should be clear. It should not happen that you don't issue your deliverables. Then ethical consideration in providing expected services or associating in the name of firm or client. So is there any ethical considerations or not? So ethical requirements we will be seeing in the later slide. Management's methods of assigning authority responsibility that we discussed, organization structure. So more or less from there it will come. Then senior management control, that also we discuss impact of computer that is combining with the management's commitment towards the information system. From that it will come. Now here impact of computers, so how it is impacted by the computer. This was more relevant in the earlier days, when there was a manual accounting system and fresh moving to the software. But in the recent time, this impact would be like, if it's an integrated accounts, then how it is impacting. If it's fully integrated, my operations are integrated with my accounts. Okay, so if something happens, then how the company will be able to generate the data, how the company will have its operations. So that impact of computers also needs to be assessed, and see how it will be, because that, suppose company cannot continue with operations, then that raises red flag for the going concern, whether the company can continue itself or not. Then activities of those charged with governance, so that also will come, that how they are acting, how they are performing. So that most of this will come from your background check and whatever annual report you would have reviewed. Nature of business I discussed earlier, so that is very critical, because you need to know whether you have expertise, whether this business you want to get involved in this business or not. That is very critical. Business environment, so here basically what are the industry conditions, regulatory environment, like for example it's a, say very highly regulated industry, then how you will be performing audit. That you have to address. Economic conditions, business model, everything has to come under business environment. So for example, the company is having a it's a plant, or say one division in a sensitive area where there is a economic instability is there, then how you have to see how I will perform that audit on that division. So that's why it's very critical to see the business environment, because it should not happen that I am not able to perform my audit procedures. Then how will I issue my report? I'll again go back to our travel example. So for example, like a destination. Okay, we were working on a destination. So if you are selecting a destination which is not safe, okay, there is a threat to your life, you will avoid to go to that destination. Similarly here, so if you are not able to perform the, you know that you have a reason to believe that no, here in these conditions I won't be able to perform audit procedures, this is riskier, this is not within my risk appetite, I may not accept. So that's why this is very critical, that this in the which environment the entity is operating. Suppose it's a highly regulated, and regulation turns that way that the company has to close down its operation, then there is a going concern issue again. So everything, you can see everything is getting linked to one or the other aspects of the audit. It has impact on your performance of audit procedures. So under, then who are the competitors? That information also gets captured over here. Is there any significant pressure on the management? So like if it's a listed entity, then there could be a pressure on the management, because there is an expectation in the public. So to meet that pressure, that could be a chance that something can happen. So that could be, it's a red flag. It's not that it will happen, but it is a red flag. So you have to increase your professional skepticism, that okay, if there is a significant pressure on the management, how they will manage, how the, but if the company is operating well and it is in expectation of the market, then it is okay. But company is not operating well and the expectations are high, then how they will bridge the gap. So those things comes into picture. So this is basically a fraud triangle. This comes into a fraud triangle. Going concern assumption that we discussed in this, but one more point over here would be like when you review the financial statement in the report, if there are any concern over the going concern, so that needs to be addressed upfront. So if there is already material uncertainty related to going concern is sitting over there, then how you will be going ahead? Do you want to connect with that? So those needs to be addressed. Uh, conditions around the surrounding the audit, so that preconditions for audit, that also we will see in the subsequent slide, but here that requirement is there. So since we have taken this document, so a lot of things which we will be discussing in the subsequent, that also comes now here. Now firm's ability to comply with auditing standard, so that is basically our competence capacity. So I think we should go first our slide. So integrity we discussed. Now competence and capability. Now competence and capability means the firm has to decide, do I have a competence to perform this engagement? Do I have a capability to perform this engagement? Okay. Now for that, so what the firm will see, what firm has? Firm is only resources, like only resources, the chartered accountants, the trainees, and the experts. They are the resources who perform the work. So whether the firm personnel have the knowledge of relevant industry and subject matter. I gave example of a banking industry. Do I have that knowledge? Okay, it could be insurance industry. And I'm not saying that I don't have that industry knowledge, that means I should not take that engagement, but there has to be certain safeguards to be implemented. Do I have experience with that? Okay, currently I don't have, but in the past, yes, I have done bank audit. 3 years ago I had done the bank audit, so I have that experience performing audit in that industry. So that is acceptable. It's not necessary that currently I should be doing. I don't have that experience, but do I have ability to that gain that necessary skill set or not? So that ability should be there, and the firm should support such ability. So that should be addressed over here. Then whether the firm is sufficient personnel to perform that engagement, okay, with the necessary capability and competence. So suppose let's take two examples. Firm has very small pool of people. Okay, it's a very small firm, say 10 people. Now, with 10 people, how many engagements it can serve? Now, engagement serving is not only checking and concluding, right? We have seen that the process has to be followed and it has to be documented. So the time has to be considered, that how much time will be spent in performing this audit engagement. It cannot be that the client is giving financial statements. From that point, I start and do the backward audit. From financial statements I start, and within a week's time, 10 days time, I need to complete. It can be completed if it's very, very small engagement. But what I'm trying to say, that assessment has to be done, that for this size of client, this size of operations, for statutory audit, how much time I need to spend, at what point of time. Okay, so suppose it's a listed entity. Now, listed entity has to be finalized within 60 days from the year end. Okay, as per this listing regulations. Now, if the company of the firm is having already 6 listed entity, then it has to see, if I take one more seventh listed entity, will I be able to give justice? Will I be able to perform that entity or not? That assessment has to be done, how will be done, and then only it can go ahead. So those assessment has to be done, because that that 2 months, April and May, would be critical period. At that time, all the resources will be required to performing this listed entity in audit engagement. So do I have that bandwidth? Those is to be addressed over here, and then to accept. Because if you don't have, it will impact the quality of audit. Okay, so we are looking for a quality audit. So quality audit ke liye you need to address all those things. Then, is there any expertise required? So there could be some complex transaction for which some expertise is required, or say, for example, companies having say SAP. It's an integrated accounts. They are integrated accounting system they are having. So for that, you need IT skills. So do I have that IT experts with me who can give me support on this? Because everything is in the IT. For example, like say it's Infosys, Wipro, which is fully IT enabled company. Okay, everything is through IT. So how you will get comfort? Everything is automated. So you need IT specialists to do audit of the IT system of the company, which will give comfort that okay, this is okay, and then you perform your audit procedures. Okay, so whether experts are required or not, if required, do I have that available, or can I hire some expert who help me in this process? Similarly, the entities will require an EQCR. Do I have EQCR who can render this service wherever required? Okay, and all those things has to be addressed as a competence and capability. So all those things here coming, like, see whether the firm's ability to comply with the auditing standard, because will I be able to comply with the auditing standard or not? So like expert requirement, EQCR requirement, everything gets captured in that. Then accounting issues that may present unacceptable risk. If there are any, this can come based on previous financial statements, or discussion with the management, or discussion with the predecessor auditor, because new client may say that okay, I have some this thing, I need some, I will touch upon, I'll touch base you about how we are going ahead with this. So that gives you, okay, there could be some complex transactions. Then significant transactions and business relationship that can come from a preliminary discussion or the review of financial statements. Then likelihood of intentional misrepresentation. So that also comes with only discussion with the predecessor auditor or with the management, or your experience at the parent company level, that what is the tone at the top basically. Otherwise, for continuing engagement, it comes by experience only. Likelihood fraud. So that same thing, based on the discussion only, for the new client, significant things comes with based on your discussion with the management, discussion with the predecessor auditor, media report search or a web search. Okay, lack of implementation of appropriate internal control. So suppose there is a controls report and that is a qualified report, then there is a red flag over here because they have not implemented appropriate internal control, and hence the predecessor auditor also qualified the report. So any such scenario is there or not. Then independence and conflict of interest threats or independence in particular, like basically this comes as a ethical requirement. So here if you go, the next third bullet was the compliance with the ethical requirements. So how the firm will be meeting the with the ethical requirements. So ethical requirements are under the ICI Code of Ethics. Okay, in the ICI Code of Ethics, you have been given these five critical or key components, which is integrity, objectivity, professional competence and due care, confidentiality, and professional behavior, and over and above the independence. So integrity is what? Integrity is being a straightforward and honest in all professional and business relationships. So is there any integrity issue with your team? Those things, this is for the professional, because here if you see, it's a independence and conflict of interest threats to independence in particular. So do I have any of these threats or not? So this will be addressed through your compliance with the ethical requirements. Okay, so integrity would be like doing the right thing even when no one is looking at. That would be the principle here, that okay, my team will be performing whatever is to be done as per the auditing standard, that will be done. I don't have a yeah, this thing concern over there. Then objectivity is basically avoiding the bias. There should not be any biasness that okay, this management is good, there cannot be any hanky panky, so I will go ahead. That way should not happen. It should be neutral. Decision should be taken on neutral. So this way you will be addressing this. So let's jump to independence. Now independence is what? It is, it should be letter and spirit. So key aspects of the independence mainly would be on the, I would say, like for example, say financial interest. Okay. So in the like I would say uh, suppose the engagement team or the people have a financial interest in the company. Say, for example, the company is a listed entity and then they have invested in that entity. Then is there any independence issue? So such people cannot work on the engagement. So at the firm level, how they do the, how it is to be decided, because suppose it's a large firm, there are so many people are there. So then the firm has to have a policies and process in place about the financial interest, that how it is to be done. But at minimum, generally for the partnership firm, at least the partner should not have any financial interest in the company. They should not have made any investment in the company. So suppose it's a new client. So how you can get, you can new client means it is not in the firm system. So you may not have that visibility. So generally, the best practice is that the firm's central team sends out mail to the partners and whoever is required to have a independence compliance, asking them that, do you have any financial interest in this entity? Do you have any business relationship with this entity, which will have a issue when if we accept this client or this engagement. So this way that independence is to be information is getting gathered. So basically, to explain in a simple words, the independence would be like auditor must be free from bias, conflict of interest. It should not have undue influence, and so that the opinion remains truthful and objectable. Okay, so suppose you have an interest in that entity, that means there are chances that you may not give justice to the work. There is a that biasness will come, and hence independence has to be maintained. Uh, so now this restriction of having financial interest will also include the close members of the close family members. So suppose a partner is there, partner is not having say interest or has not made investment in the entity, but partner's wife has made. So if wife is a close family member, then it will have a red flag. So those things has to be considered. So financial trade, business relationship, suppose any services are rendered, okay, so that consulting services are suppose rendered to this entity, then it's a non-audit service, so that could be a threat on that. So that should be avoided. So you should not render any non-audit services or such non-audit services to the client. Then fee dependency. So suppose the client is giving a huge fee, and that fee itself is contributing say 80% of your firm's revenue. So again, there could be a concern. Okay, so is the that is the one criteria needs to be considered when you go for a compliance with the ethical requirements. Then long association, we discussed the rotation requirements, and also that has to be addressed. So here, independence and conflict, you perform all those things, perform the procedures, you cross-refer the document, and then you conclude over here that based on the procedures performed, you conclude that I don't have any concern related to the ethical requirements or independence or conflict of interest. So these are the things over there. So long association. So suppose this long association will not come for the new client because you you are engaging with the client for the first time for the audit engagement. But would it if it is a continuing client, then the long association may have a issue because and there are anyway mandatory rotation requirement in certain industry, like for NBFC it's a 3 year company, five
Alpa
years.
ma'am,
Yeah,
Alpa ma'am, I think we have explained continuance and engagement acceptance. Now we can move towards engagement letter also, if the
yeah, yeah,
client accepts,
yeah.
right? Because
So
we will be having lesser time and we can explain that part also with the
yeah, yeah,
help
that
of
I
engagement letter showing
correct.
that. Yeah, thank you.
So after this, you will be assigning risk, concluding, and the approval process. Okay. So this document, if you see here, we had reached over here. So after this, you are concluding. Now here you will have a final conclusion. There will be a approval process, means the one person would be recommending and the other person would be concurring. It cannot be a one-person decision. So that way, this also gets documented. This is the entire document for the client acceptance and continuous. After having client acceptance and continuous, you go for a preconditions for audit. Now, preconditions for an audit and the engagement letter, I'll be combining two. Okay. Preconditions for audit is that management, the use of management of acceptable financial reporting framework and their acknowledgements. Okay. So these are the preconditions for an audit, that whether the financial reporting framework to be applied in the preparation of financial statements is acceptable. So generally, this is acceptable because suppose it's a company, the financial statements will be under the audit will be under the Companies Act. The financial reporting would be under the Companies Act. But if it's other than company, then whether that reporting framework is appropriate or not, that is to be assessed. If there is a conflict, then you cannot, because then your precondition itself is not existing. Then obtain the agreement of management that it acknowledges and understands. So this is very critical because the management should acknowledge that it has a responsibility of preparation of financial statement. Financial statement is not the responsibility of auditor to prepare. It's a management responsibility. So they have to acknowledge that responsibility, and all these things will come in your engagement letter. They are also responsible for maintaining and implementing the internal control, and they are responsible for providing auditor the access to all information and access to the person for the required for whatever it requires for the obtaining the audit evidence. If any of these preconditions are not met, you cannot accept the audit engagement, and hence it is very critical that this is addressed well before, because what happens, this is at the time of acceptance, client and engagement acceptance. Okay. When you do client acceptance, engagement acceptance, that means your firm has given clearance that yes, this engagement can be taken, but you have not yet accepted. After this clearance only, you can go to client and say, yes, we can accept. There has to be appointment formalities, and after appointment formalities, the engagement letter can be issued. Okay. Now, if at the time after you are appointed, and if these things comes up, how you will say I will not able to accept the appointment, and hence preconditions has to be seen before committing to the client. Can yes, you are eligible to accept the engagement. Then the agreement on the audit terms. So agreement, audit engagement letter. So here, these are the key requirements. What you will be clarifying, you will be clarifying objective and scope of financial statements. What is the responsibility of auditor? What is the responsibility of the management? The financial reporting framework which will be used, and what will be the form and content of the expected report. This is very critical. This is given by the standard minimum. This should be there. Okay. Now you will see how you will be addressing this in your engagement letter. Now, this is the engagement letter. Okay, first of all, the engagement letter you will be issuing in the firm's name. So it will be in the firm's letterhead. Okay, so you can see this is the firm's letterhead. Okay, first page will be firm's letterhead, and the second page could be continuance sheet where only the firm's name could be there. Now, engagement letter has to be addressed. This is a company, so I'm saying it's a board of directors. So basically, engagement letter has to be addressed to those charged with the governance, those who are responsible for the financial statements. Okay, so it will go to the board of directors. The address will be there. You cannot send it to the CFO or MD. It has to be board, because the board, the management will take the responsibility for the engagement letter. They will be confirming on behalf of the company. Now you start with like how you are sending, and you need to provide the context. So like basically you will be informed that, because if it's a company, then your appointment would be done in the AGM. Okay, so that will come. If it's the first year of the company, your appointment will be done by the board. So then the board reference will come. Only in the first year of audit, the board can appoint. Subsequent to that, the only members of the company can appoint, unless there is a casual vacancy. So here you will be stating that, okay, how you have been approached for this, and what would be the term for your this thing. Okay, and you have been requested. So this is your financial reporting framework, because you have been requested to perform audit under the Companies Act. Okay, now as we mentioned in the given example, we have taken an example of a parent company. Okay, it's a parent company, so that will mean consolidated financial statement as well. So in such cases where you have a consolidated financial statements, in the engagement letter, you will be stating that this financial statements, here is the financial statements in the first line. This financial statements also includes the consolidated financial statements. So you will be auditing both. So you have to clearly bring in the engagement letter. What is your engagement? It's a audit of standalone financial statements and the consolidated financial statements. Okay. Then the terms comes. So you will be saying that what is the object of our audit? That has to clearly come out. That our object is to express true and fair opinion only. We are not here to detect the fraud. Okay, so that the standard language, the what standard is giving language, that is given over here. That what is the object? Object is to give true and fair view in conformity with the applicable accounting principles. Now, of the financial statements. So you define financial statements consisting of balance sheet, P&L, cash flow. Those things will come over here. Why am I explaining this? Because you may have an audit of, say, trust, partnership firm. So accordingly, you have to define which are the financial statement components. So that way you have to modify this engagement letter in line with that. Now, this is a company, and here also the internal control is reporting is applicable. So that also you have to bring. So you will be saying that in conjunction with your internal audit, internal control of internal financial control, for which you have already issued a separate engagement letter. If you are not issued separate engagement letter, that can also be part of this engagement letter, because that would be more focusing on the internal control part. This engagement letter focuses on the financial statement part. So that internal control, if COFAR related requirements will come over here. And now where there will be reliance on the work of the other auditors, so that because SS 600 allows us to rely on the work of other auditors, and but requires us to mention specifically that in the audit report. So that should also clearly come out in the engagement letter, because then the management should not come and say that that auditor has already reported, and why you have a problem. You can say that you have seen, there is no need to bring in the separately in the audit report. that you have relied on the work of the other auditors. But the standard requires, and hence it has to be clearly bring in the audit engagement letter, so that you can bring that, because other auditors will include your branch auditors. So at the standalone level, it will be branch auditors, and the branch auditors, if appointed under the Companies Act, it will be branch auditor, and if it is not appointed under the Companies Act, it will be other auditors. So that way, at the standalone level, and at console level, so definitely the auditor of a component becomes another auditor. So that comes, then you
Alpaji,
define.
1 second. We have 2, 3 queries of the students. Aman Jain is asking, audit is a new subject for me and I'm starting regular audit classes from today. I currently have limited idea about the chapters. Can I still attend the audit insights, bridging theory with practice session? Is it necessary to cover the portion of the syllabus before attending these sessions? Dear Aman, we are covering auditing standards, practical application. So definitely, though it is a new subject, but you can understand the concept, and when you will be reading and interlinking it with theoretical concept given in the auditing standard, how it is applied practically, Alpa ma'am is telling you that. So there is no harm if it's a new subject, but definitely you can attend it. It will definitely enhance your knowledge. And Namita is asking, ma'am, all these things which are shown in this form needs to be checked in integrity section of client. Alpa ma'am.
So integrity, whatever I had shown, that is to be checked. So that will be done by the firm's central risk team.
And Harinath is asking, in which stage of the audit management return representation are to be mandatorily obtained?
MRL will come, signed MRL generally will come at the end of audit in the conclude and reporting section in the first slide I had shown. But during the course of audit, whenever you come across where certain representations are made by the management, it is very critical. You can take at that point of time as well. But
Yes.
at
Yes.
minimum, consolidated MRL can be taken at the end before signing of the audit report. Without management representation letter, you should not sign the audit report.
And Gayatri is asking, as someone who has never studied audit, will this session be of any help? Or will it be difficult to understand most of the topic? I think, Gayatri, you can see that we are telling you with the help of practical documents. Of course, we are interlinking with theoretical concept, as Alpaji shown you in the PPT in the beginning, right? And she has also shown you how it is being applied more on the practical side. And if you are simultaneously studying the standard with the same, you will definitely get the good grip over it. And when you will be going for the exam, it will definitely be helpful. Further, it will also be helpful when you are going for practically auditing, right? Then some of the top questions which you have asked students, it will be taken like Nandaram Goyal, Vishwakarma, those questions will be taken when the session will be on that topic. Like we are, if you have seen the flyer, we are having A to H session series, right? For preliminary engagement, there are 2 hours allocated on 21st, and today we have commenced. Then we have B, audit strategy, audit planning, and audit program. It is divided into 4 hours. So as and when those topics will be covered, we'll definitely take it in practical aspect. And in the meantime, if you have anything specific, you can write to us. We will definitely look into it. Now, not interfering much because we are running short of time. Over to you, Alpa ma'am.
Sure. Then comes the auditor's responsibility. Here, the auditor's responsibility is to be documented. This is very critical. Now, one thing I would like to bring to your notice that this is not only for the audit, for any engagement you do, for all engagement, the engagement letter is mandatory. If you see the guidance note on the certification that that covers the engagement other than the audit engagement, for that also these requirements are there. What is the purpose? Because this document is used to document the auditor's responsibility, the management responsibility, and the final deliverable, and the framework under which the documents will be issued. And hence, it is very critical for any engagement. We should be very clear what is our responsibility and what is management responsibility, so that it is easy that we can perform procedures as required by the auditing standard. So this being a company's audit, so auditor's responsibility is under as per an auditing standard specified under 143.10. 143.10 standards are same currently same as what institute has issued, standards on auditing. So but here we are saying including those standards, standard of auditing issued by ICA. This is because suppose some standard of auditing is issued and which is not yet notified under 143.10, that also needs to be complied with, because this audit is under Companies Act. So as per Companies Act we will do, but primarily we are also responsible to comply with the auditing standard of institute as a professional ethics. Okay, so that also we have to comply with, and hence this is also included, that it's not that only the standard under the act, but also if there are any other standards by the institute, that also will be considered. Okay, now here entire audit process is explained, because my responsibility is covered from SA 200 to SA 700. So it will include risk assessment, it will include the understanding entity business, it will include the controls. So everything is covered over here, so that the management cannot say, no, you are not supposed to perform this procedure. So we are making clear that as per standard, I'm supposed to do this, and hence for this engagement I will be performing this. I will identify and assess the risk of material misstatement of the financial statements. Then to mitigate that risk, I will be performing the audit procedures. So I will plan and perform procedures. That way it is coming. Misstatement is coming, then how it will be addressed. That is my responsibility. Understanding of internal control. Now, if there is no controls opinion, then I will change that. If there is no controls opinion, that doesn't mean that I should not obtain the understanding of internal control, because standard mandates me to have the understanding of internal control. Okay, so I will have the understanding of internal control, but I will not opine on that. I'll make it very clear. Here, I'll be opining, so I'll be saying that okay, I'll be doing this and I'll be opining. But if there is no controls opinion, I'll be saying, but not for the expressing our opinion on the control. That we will make very clear. Same way, appropriateness of accounting policy, that we have to see, because if the client is not following appropriate accounting policy, it is not in compliance with the accounting standard, then we have to qualify. First we have to explain client, and if they don't correct it, then we have to qualify with some material. So those things are coming. Then going concern, we have seen that in the concluding stage it will come. So whether the management assessment of GC is appropriate or not, that also we will evaluate. So all our responsibility, like evaluate overall presentation structure of financial statements. If the financial statements are not prepared as per the Schedule 3, this is a company, so I'm saying as per Schedule 3 of the Act, then it is not acceptable. So that also will come, because the management will come. Okay, I have given you financial statement, now certain things I have combined. You accept it, but if it is not meeting the minimum requirements, it is not acceptable. So all those things you have to make it very clear. Then because of inherent. So here we are bringing the fraud concept here, because we are not responsible for that. Whatever testing we do, that doesn't mean that fraud, if any, will be detected by us. It's not clean sheet from us. We are just based on sample, whatever we have performed procedures, based on that we are concluding. So that we are giving here. Then comes the management responsibility. So we are making very clear that you are responsible for this, and you have to do this whenever I'm performing audit, so that that will enable me to perform the audit procedure. So for the preparation of financial statements, management will be responsible for all those requirements. So that is clearly stated. So they should be ensuring compliance with the act. They should maintain proper books of account. They cannot say I'm not maintaining books of account. They should prepare the financial statement. They cannot ask us to prepare the financial statements. Then annual accounts, that is okay. Selection of account, they should be selecting accounting policy, not the auditor. They should be selecting accounting policy which is as per the accounting standard, which is relevant, and continuously, consistently they should follow. They cannot change accounting policy every year. This year I will follow SLM method for depreciation, next year I will follow WDV method for depreciation, again third year I will follow SLM depreciation. Not acceptable. You should consistently follow. If you want to change, we will see. Change once in a while. And why that change, whether it is permitted as per standard, those things will come. But the management is responsible to have a consistent application of a appropriate accounting policy. Then accounting records, they should take proper care and maintain the accounting records, and safeguarding of accounting records is their responsibility. Internal financial control, laying down and maintaining, is their responsibility. So that way management responsibility is given. Now, we also want them to take responsibility, that they have to inform us. Certain things we will not know. Okay, so suppose there are certain pending litigation, so that doesn't come in your transaction audit. It will come when you meet the legal team. So they will discuss and they will know. But you have to cast responsibility on the management that they have to give you all the information related to pending litigation, because that will help us to determine the contingent liability is there or not, or this needs to be provided or not. Is there any impact on a GC or not? All this assessment comes. So these are very critical, so that it is possible, because if you don't put, then management may not give you this. They will not give entire list of pending litigation. Then we don't have visibility. We don't get the completeness of the contingent liability. We don't get the completeness of the recorded provisions. Then all material foreseeable losses, because this information will be with the management. They have to share with us. Then delay in transferring investor education protection fund, because these are statutory dues, so that will have an impact on your CARO reporting. Then these are reporting requirement under the Rule 11 of the Act, where it requires any funding requirement. So this in detail we will be covering in the audit report. So this we have to include in management responsibility, because our reporting is based on the management representation. We have to make a statement that based on the management representation XYZ, and then based on our audit procedures we are concluding. So that's why that representation management has to give. So first they have to take responsibility. So those areas we have covered. So this way you have to cover everything in the management responsibility which is required for your performance audit and reporting purpose. Similarly, uh, see what happens. You have already signed the financial statements. Okay, you have signed and given. Of which during the period from the date of our report to the date of financial statements are issued. And the financial statement is to be issued means when it is made publicly available. So now suppose some event happens, how we will know unless management informs? So we are casting responsibility on the management that if something happens after my signing of the report and there are certain events happening which has impact on the financial statement, they have to inform us. Then we will perform the procedures and take action as per the auditing standard. So that's why this is for a subsequent event review standard compliance with the requirements of subsequent event review. We are giving this under the management responsibility. Then there is a reporting requirement that whether the directors are there on the board, whether they are disqualified as on 31st March or not. So that reporting requirement is there. So for that also we are casting, because they have to give that information. We will perform the procedure, but first they have to give us the information. So that they have to do. Then they have to give access to us. They cannot restrict our access to any of the person. They cannot say you cannot meet to this person for a discussion or inquiry, because we need to discuss with all people to get the understanding. We need to meet the sales people. We need to meet purchase people. We need to meet inventory people. We need to meet finance people to understand what they are doing, how it is impacting financial statement, how it is impacting books of accounts, everything. Unless you know, you cannot do audit. So that's why that access is required. So all the same way, other information SS 720. So all this reporting requirement related, whatever management has to give us, that is covered here. That goes under management responsibility statement. Independence matter. So here also we have to give the what, because certain information management has to give that for to ensure that we are independent. Okay, so because we need to know which are the entities within the group to see that our independence is not impacted. So that information they have to give us. Then they will call, suppose like there is a independence impacted. Suppose our employee of the firm is taking position in the client organization, so there could be some independence trade. So we are asking them that okay, if such things are happening, then you have to inform us first that okay, you are considering this requirement. Because suppose the audit manager is taking the CFO position in the client, then there could be a threat while performing audit. It impacts our independence, and hence this clause is given in the engagement letter that if such thing is there, they will inform us. Then auditors reporting responsibility. So what report we will be issuing? In the earlier slide, we have seen that form and report and conform and content of the report. So we'll be issuing reporting a report under the Companies Act. Then Companies Act also casts responsibility on the auditor about the fraud reporting, which is under 143(12). So that is also given, because they cannot say that this fraud is our internal, we will manage, you don't report. They cannot say that. So that will also come under the report because it is our reporting responsibility. Based on the threshold provided, we have to report to board, we have to report to management, we have to report to the government, and so on and so forth. Same way, suppose we don't have expertise, we will be involving specialists. So that also we have to tell because they should not say, "Kare, these are not audit people, they should not work on our engagement." So that will also come. So that will make it clear that our engagement will be subject to peer review or a quality review, because of which the reviewers will be coming and looking at that file. So that we have to inform well in advance that okay, they will be looking at our work paper, so that we are informing. You cannot restrict us that this cannot be seen by them. There cannot be any confidentiality breach or this thing, because I'm sharing this document, sharing not sharing, but I'm allowing them to see the work paper, which may include your documents as well. Now there can be some other engagements as well, so those also can be incorporated over here. As I mentioned, for all engagement we should be very clear what is the reporting framework, what is the management responsibility, and what is our responsibility and deliverable. So everything will come. So you can see here, like see this para, it's a auditor's responsibility, then management responsibility. Same way, limited review. So then terms of this is the terms of resignation is required for the listed entity where SEBI requirement is there. So that is also covered here. So any law and regulation provides any specific requirement which auditor has to do, that also should form part of engagement letter. That if these things happen, then as per law I am supposed to do this. That is also covered under engagement letter. Then general terms means it's a general applicable for all engagement. So like you have to there is a requirement that for all the reports, while signing the member has to provide the your unique identification number, you have to give. So that is available on the portal, ICA ka portal. So that you will bring that, okay, because to get that information, that get that number, you have to feed some information, financial related information. So for that also you have to put it in the, everything has to be there in the engagement letter, that we will be doing all those things. Confidentiality matter is there, that will be keeping confidential. Then your fees terms also is agreed in, like whether it is fixed, then you will mention, okay, this is the fee. If it is agreed to be agreed by the board of directors, that is to be stated. Limitation on damages, indemnification, all those things comes. Then lastly we will be asking them to give the full cooperation, and we will ask them to provide us the acknowledged copy of this document. It's not only one-way document. That means that they have to also acknowledge. Now, in this company, there is an audit committee or a board, so we have to copy to them as well, because they have to acknowledge. It is their responsibility. So this is signed by the, when it is signed, it will be on behalf of the firm by the partner with the firm registration number, then the partner name and initial will come. Then if it is going to the company, means it's the audit committee chair or a board, then it will come acknowledge on behalf of name of the company, like board of directors, in terms of approved by so and so. So in terms of approval means the board or audit committee, they would have given pass the resolution. So that copy or that extract you need to take as a supporting, because then only they can accept. So it cannot be just accepted by a MD, CEO, financial controller. It should be signed by that person who have been authorized to do that through the resolution. Okay, so in the given case that will come, then the name who is signing, everything will come. So this way the engagement letter gets, it needs to be signed. Now this engagement letter, you have to ensure that each page is signed by the firm partner, because we, this is our document, so we need to ensure that all document, there is no fudging, no fudge happens in the future. So we sign all the documents. Now this engagement letter, when you will be issuing, so this will be issued after your client and engagement acceptance clearance done at the firm level, after you obtain the appointment letter from the entity. Okay, so they have given the appointment letter. This appointment letter is after our appointment approved by the members or the board, as the case may be. After this, so suppose it's a first year of audit, you will be seeking NOC from the predecessor auditor. After obtaining response, then only you can see, or maybe at least you should give sufficient time to a predecessor auditor to give the NOC, because otherwise there is a ethics non-compliance, because code of ethics mandates to do that. Okay, so you have to seek NOC from the predecessor auditor. Now this is on 3rd August, I'm sending on 14th August, and the management is accepting on on 31st August. So ensure that the management acceptance date is there so that we know. And after that only our significant portion of audit work can start. Without issuing engagement letter, we cannot start any audit work. Okay. So that is very critical. Now this is the we are the auditor, but suppose it's a joint audit engagement. Now joint audit engagement requires a joint audit engagement letter is to be issued. So what will happen here? Two firms name will come. Suppose it's a two joint auditor. So now firm A will come this side, firm B will come on this other side. So that letterhead is not is to be generated, like generally it happens that in the header the two firms name and addresses are given, so that way the joint audit is done. So moving back here, special consideration joint audit which we were discussing. So joint audit, in case of joint audit, the engagement letter has to be issued jointly. Two firms cannot issue separate engagement letter, it has to be issued jointly, and hence the engagement letter which we have seen, that will be joint audit engagement letter
चलो
with the
समझ
name.
भी तो आए
Then coming to initial audit engagement, that also we discussed. The code requires that we cannot accept engagement without first communicating with him in writing. Okay, so you need to have a proof of evidence, proof or evidence that you have communicated with the predecessor auditor. You will be sending a letter to the predecessor auditor asking him whether he has any professional or otherwise any objection for you accepting the engagement. Okay, that letter has to be sent. It could be registered ID or email, whatever. That proof you have to keep in your file, and you have to give sufficient time. It cannot be like I have given now and same day or within a day's time I will accept without waiting for response from him. What if he says he has a concern and I cannot accept the engagement? And if you have issued the engagement letter, you have accepted the engagement. Then there is a non-compliance. So that's why it is very critical that this is also performed, and hence you see there is a time gap. After appointment letter, immediately engagement letter is not issued because I have to perform certain procedures. So that is to be performed. Then only engagement letter can be issued, and that has to be acknowledged by the client. Now, this ethics also requires that I need to ensure that there are no outstanding of predecessor audit fees. So if there are audit fees outstanding, again, you have to discuss with management and predecessor auditor and understand how that will be regularized. That is requirement of the code. Then documentation requirements, record of client acceptance and continuance, and similarly engagement acceptance and continuance. This is the first document which we have seen where we documented the requirements. Independence and ethics compliance, that procedures has to be performed, and for that the documentation will be done by the central team. But you can see in the Institute Implementation Guide where they have given a format of annual independence confirmation that can be used for this requirement. Acknowledge engagement letter, we have just seen acknowledge engagement letter, and professional judgment, if any, along with basis. That means during this entire process, you will be using a lot of professional judgment, like you have certain red flags, or suppose something is there but you are concluding it's not red flag. Why not red flag? You will be documenting. So that's your judgment. If it's a red flag and you are still accepting, there is a professional judgment. So everything has to be documented. What is the judgment you have used and how you have concluded. So that will be the documentation requirement for preliminary engagement activity. Now you can refer this, for all these are coming from your standard of SQC1, which I mentioned you, client and engagement acceptance and continuous policy in process. It is coming under SQC1. SA 200, where your client continuance requirements are specified. SA 210 for your engagement letter, SA 220, 230, then implementation guide. These implementation guides give you the more guidance. So those are the technical resources you can refer. Now let's quickly go through certain knowledge check, what we have understood now, preliminary engagement activity, whether are we able to apply those concepts in this scenarios or not. So we won't take much time, should take 5-10 minutes more. Now, scenario one is that a CFO of a medium-sized firm approaches you for audit, and during discussion, okay, so they have approached and you are having discussion with the CFO. He says that audit report is unnecessarily qualified by the auditor, that means predecessor auditor, And we need a practical auditor who can understand the situation and then take appropriate action. So indirectly saying that the predecessor auditor is not a practical, he is not understood, and that way he has given the qualified report. So now with this, do you feel that this indicates any risk? And if so, it may not indicate, but if you feel it is indicating, then which process of the audit and what is the risk? Okay, so just think over it. What is the risk? So I'll give you the answer. So in my view, this indicates the risk. It relates to client and engagement acceptance, because this scenario clearly says it's a predecessor auditor. That means I'm accepting new client and engagement. And it's a client integrity, because how we can say that the predecessor auditor has not qualified appropriately. Tomorrow they will pressurize us as well. So it's a client integrity. This needs to be considered, and we have to document how we will be addressing such pressure from the management. So basically, he is trying to say that if you give me the clean report, I will give you the audit. Indirect meaning comes from this is that. So it's like opinion shopping. There could be pressure on auditor. So those things are there. Next scenario is like you are approached by a sole proprietor to audit its books of account, and he intends to borrow the money. Now, because he wants to borrow, he wants to have a borrowing, so and the borrower has asked that audit accounts is to be audited. Now, sole proprietor informs that he doesn't have any accounts team, so he is requesting auditor that you have to guide his team to prepare the financial statement. Now, do you think that this indicates the risk? If yes, for which process of audit and why it is a risk? So to answer this, yes, this indicates risk, because you have seen the precondition for audit, where we have said that the management has to acknowledge responsibility, that they are responsible for the preparation of financial statements or financial reporting. Okay, and now it's self-review threat. Why? Because guiding means what? Actually, we will be telling the accounts team that how they have to prepare the financial statements, and I am auditing that. So I am auditing my work only. So it's a self-review threat. I cannot review my work. I review, then I will be biased. And I have only prepared the financial statements, it's not wrong. And I will not be able to audit it. And hence it puts a self-review trade. Next scenario is you as a manager of a sole proprietary CA firm, sole proprietary, approaches to a managing director of a prospective client, and during discussion you become aware that appointment formalities of a CFO will be completed in few days. In your next meeting, this newly appointed CFO is also involved in the discussion, and you realize that this CFO is a husband of your employer. Now, does this indicate any risk? If yes, for which requirement of audit and what are the risks? Okay. Now, this also indicates a risk, because it's again part of a preliminary engagement activity. It affects my independence criteria, because it's a sole proprietary concern. Wife of a sole proprietor is appointed as a CFO of this entity. So there is a independence risk. And there is a familiarity trait, because the sole proprietor who would be signing the financial statement as an auditor, she knows the CFO. So there is a familiarity trait. Okay, so ideally in this scenario, the engagement has to be declined to be accepted. Now, same scenario, we will tweak it. Now, now in this scenario, instead of proprietary firm, it's a partnership firm. So what will happen? Now, if it's a partnership firm, still it puts a threat. But what we can do, we can ensure that the engagement is not done by that partner. Engagement can be performed by another partner. And if that is not possible, then the engagement needs to be declined. Now, let's take another scenario. Now, on 13th July, the auditor provided engagement letter to the CFO of a large manufacturing company. As the board meeting to consider the audited financial statement was scheduled on 15 September, the management requested engagement team to start the audit at earliest. The engagement team started its audit work from 21st July. Okay, I was appointed auditor. And on 3rd August, ET obtained the copy of engagement letter duly acknowledged by the finance controller. So whether this is acceptable or not. Okay, so see the dates. 13th July, the engagement letter is provided. And the audit work started on 21st July. The acknowledged copy of the engagement letter came on the 3rd August. And that too acknowledged by the finance controller. So we have just seen what is to be done. Okay, so this is not acceptable. Why? Because we have started the work before the engagement is being accepted by the client, means it is acknowledged by the client, because I have sent no engagement letter on 13th July, and it got acknowledged on 3rd August. But I started my work on 21st July. You can start preliminary work, but the detailed work cannot be started. Okay. Then this is also acknowledged by the financial controller. So I don't know whether the person has been given power by the board of directors or not. So that is not clear. So that also needs to be seen. So now the last scenario is that PQR associates chartered accountants are appointed as statutory of Goods Transport Limited and its wholly owned subsidiary Vehicle Services Private Limited. Now management of both parent and holding company and the accounts team are the same. The engagement team is also common for both parent and wholly owned subsidiary company. Now, SA 210 states that when the auditor of a parent entity is also auditor of a component, the factor that may influence the decision whether to send a separate audit engagement letter to the component include the following: who appoints a component auditor, whether the separate auditor's report is to be issued on the component, legal requirements in relation to audit appointment, degree of ownership by parent, and degree of independence of the component management. Now, in this scenario, should a separate engagement letter be sent to wholly owned subsidiary when the auditor of a parent is also auditor of a wholly owned subsidiary? So, in my view, yes, it is to be sent, because parent and its wholly owned subsidiary both are separate legal entity. Okay, and both being company, auditors are appointed by the respective boards under the Companies Act. So boards are different, though the board members may be same, but the board of the company is different, and hence the separate engagement letter is to be issued. So, do we have any other question answer, Karuna ji?
Yes. A student is asking how is going concern assess in practical scenario. I think that we will be covering in our next session, assessment. And in your case scenario, some of the student answered, like Samyanathan asked self review threat, familiarity risk. And for
Very
one of
good.
the question, he answered not acceptable for case scenario 5.
Very good, very good.
So, yeah. And Namita was also answering.
They understood the concept and they are able to
Yeah.
implement the concept.
Right. And Namita was telling, ma'am, in question 1, can we say that it indicates the risk under clause 8 of schedule 1? So they were answering your questions, right? And
Yeah. Very
yeah,
good.
yeah, yeah. Thank you so much, Alpa ma'am. And now I would request CA Rajiv Sachdeva sir to conclude the session. Over to you, sir.
Yes, students, इस सेशन से आपने बहुत गेन किया होगा. स्टूडेंट्स, प्रिलिमिनरी एंगेजमेंट एक्टिविटीज पे ये सेशन था. इफ यू आस्क मी रियली, प्रिलिमिनरी एंगेजमेंट चार्टर्ड अकाउंटेंट असाइनमेंट एक्सेप्ट करे या ना करे, उससे पहले वो प्रिलिमिनरी एंगेजमेंट एक्टिविटीज करता है. जैसे कि आसान भाषा में अगर और मैं इसको कहूं तो केवाईसी, क्लाइंट की केवाईसी को चेक करना, नो योर क्लाइंट इन एडवांस. अगर क्लाइंट की केवाईसी आप कैसे चेक करोगे? मैं क्लाइंट को एक्सेप्ट करूं या ना करूं? क्लाइंट को स्टूडेंट्स एक्सेप्ट करने से पहले आप ये देखो उसकी, क्लाइंट की एक मार्केट में क्या रेपुटेशन है, क्या वो क्लाइंट मीडिया रिपोर्ट्स या रिपोर्ट्स इस तरह की आई हैं, क्या वो फ्रॉड कर चुका है पहले से, तो मैं स्ट्रेट अवे उसे मना. क्या वो बैंक ने डिफॉल्टर अगर कर दिया क्लाइंट को, तो और मेरे पास उसकी इंफॉर्मेशन है, क्या वो इनकम टैक्स का उसका बिहेवियर अच्छा नहीं है, उसका जनरल कंडक्ट कैसा है? तो पहले तो आप कंडक्ट ही देखो एक बार. अगर मुझे पता है कि ये क्लाइंट का कंडक्ट ही अच्छा नहीं, बिहेवियर ही अच्छा नहीं है, तो मैं क्यों उससे एक्सेप्ट करूंगा? तो ये सारी चीजें प्रिलिमिनरी एंगेजमेंट एक्टिविटीज बहुत ही, अगर आप दो चार, अभी एक स्टूडेंट ने क्वेश्चन पूछा था वो मैं आंसर करूंगा कि क्या हमें, अगर ऑडिटिंग अभी हमने नहीं पढ़नी नहीं स्टार्ट किया, क्या हम समझ सकते हैं? तो आप समझ सकते हो इसे। यस, इसीलिए शुरू किया स्टूडेंट्स। और ये प्रैक्टिकली ही ऐसे होता है कि आप, एक क्लाइंट मेरे पास आता है, मैं उसे कैसे उसे कहूं कि हाँ मैं तेरी असाइनमेंट एक्सेप्ट करूंगा या नहीं करूंगा। और मुझे पता है कि ये क्लाइंट का बिहेवियर जनरली ही ठीक नहीं है। मार्केट में हर एक के साथ, बैंक में जाता है, लोन लेता है, तो कभी इसने वापस ही नहीं करा। इनकम टैक्स डिपार्टमेंट के इसने पैसे देने, जीएसटी में फर्जी ट्रेडिंग कर रहा है, ये परचेज के बिल है और बिल्स का काम कर रहा है। ऐसे बहुत सारे क्लाइंट्स हैं, तो मैं उनको एक्सेप्ट क्यों करूंगा? तो ये सारी बातें, अगर आपको पता है कि ये क्लाइंट तो बिल्कुल ही साफ सुथरा है, ये क्लाइंट ने कभी बैंक से, इसका सारे बिहेवियर अच्छे हैं, इसने बैंक का इंटरेस्ट है, ये टाइम पर दे रहा है, ये इनकम टैक्स की अपनी रिटर्न टाइम पर भरता है, ये अपने, इसका कंडक्ट बहुत अच्छा है, बिहेवियर बहुत अच्छा है, इंटेग्रिटी, मार्केट में इसकी गुडविल बहुत अच्छी है। तो ये चीजें हैं जो आपने वो नो योर क्लाइंट्स में करनी है, ये जो मैं आपको बता रहा हूं। तो मैडम ने बहुत इलेबोरेट करके आपको ये बताई है, तो आप ओवरव्यू भी समझो और इलेबोरेट जो मैडम ने आपको बताया वो भी आप इसको अच्छी तरह से समझोगे। और आगे के सेशन स्टूडेंट्स, आपका जो नेक्स्ट सेशन है वो 24 और 28 जनवरी को होगा, और वो ऑडिट स्ट्रेटजी, ऑडिट प्लानिंग एंड ऑडिट प्रोग्राम पर होगा। तो ये स्टूडेंट्स, आप इन सेशंस में, ये प्रैक्टिकल सेशंस होंगे, 100% प्रैक्टिकल होंगे, आई एश्योर यू, और विद फुल डॉक्यूमेंटेशन। और आप इनमें अपनी प्रेजेंस, आपको इनसे बहुत गेन होगा। और आपका एग्जामिनेशन जो है, आप जब एग्जाम दोगे तो उसमें आपका एक माइंड ओपन अप होगा और आप एग्जाम अच्छे से कर पाओगे। तो स्टूडेंट्स, थैंक यू मैडम, थैंक यू, आपने बहुत अच्छा स्टूडेंट्स को बताया। और थैंक यू स्टूडेंट्स, विद दीज वर्ड्स, थैंक यू वेरी मच।
Thank you very much, students. And as Alpama has already nicely explained, and Rajiv sir also elaborated. So, with this, I hope when you are studying the theory, you will be able to correlate the same when you are with the practical situation, right? And in the examination, also, you will be able to visualize the same. So, with this, looking forward to see you in our next session on 24th. Once again, thank you, Alpa ma'am. Thank you,
Thank you,
Rajiv sir. Thank you, dear students, for your patience listening. Thanks a lot.
Thank you.